Welcome to Crypto Intel, your trusted source for crypto news, market analysis, and the future of digital finance. If you've been following the crypto market recently, you may have noticed one project quietly gaining attention again: HBAR, the native cryptocurrency of the Hedera network. Some investors believe Hedera could become one of the most important enterprise blockchain platforms in the world. Others argue it's still heavily underestimated compared to giants like Bitcoin and Ethereum. So the big question is HBAR one of the most undervalued crypto projects right now? Or just another overhyped blockchain experiment? In today's video, we're going to break it all down. We'll look at what Hedera actually is and how its technology works, why major corporations are involved in the network, the latest news surrounding HBAR, real-world adoption and partnerships, and finally, what the future could look like for the project. By the end of this video, you'll have a clear understanding of whether HBAR deserves a place on your radar in the rapidly evolving crypto market. But before we dive in, if you're interested in data-driven crypto analysis, market insights, and the future of digital assets, make sure to subscribe to Crypto Intel and turn on notifications so you never miss an update. Now let's start with the fundamentals. HBAR is the native cryptocurrency of Hedera, a public distributed ledger that launched in 2019. But unlike most cryptocurrencies, Hedera doesn't actually use a traditional blockchain. Instead, it runs on a technology called Hashgraph, which was created by computer scientist Dr. Lehman Baird. This technology uses a unique consensus mechanism called gossip about gossip, allowing transactions to spread across the network extremely quickly while maintaining security and fairness. In simple terms, Hashgraph allows the network to process transactions much faster and more efficiently than many traditional blockchains. While networks like Bitcoin process around 7 transactions per second and Ethereum processes roughly 15 to 30, Hedera has the potential to handle thousands of transactions per second with extremely low fees. And that's one of the biggest reasons why many enterprises have started paying attention to the project. But Hedera has another unusual feature that makes it stand out in the crypto industry: its governance model. And this is where things get very interesting. Now here's where Hedera really separates itself from most crypto projects. Unlike Bitcoin or Ethereum, which rely on decentralized communities of miners or validators, Hedera is governed by something called the Hedera Governing Council. This council is made up of some of the largest and most respected companies and institutions in the world. Members of the council have included global organizations such as Google, IBM, Boeing, LG, Dell, Deutsche Telekom, Ubisoft, and several major universities. Each council member helps oversee the network, vote on upgrades, and maintain long-term stability for the ecosystem. The idea behind this model is to create a trusted and enterprise-friendly infrastructure for businesses that want to build applications on distributed ledger technology. Instead of relying purely on anonymous validators, Hedera's governance structure aims to combine decentralization with corporate accountability. For large companies considering blockchain solutions, this kind of structure can actually be very attractive. And that's one of the main reasons Hedera has focused heavily on real-world enterprise adoption rather than hype-driven speculation. But the technology itself is also a major factor. Hedera offers several core services that developers can use to build applications. First, there's the Hedera Token Service, which allows businesses to create and manage tokens on the network. This can be used for everything from stablecoins to loyalty programs and digital assets. Second, there's the Hedera Consensus Service, which provides extremely fast and secure timestamping of data. This is particularly useful for industries like supply chains, healthcare records, and financial transactions where data integrity is critical. And third, there's the Hedera Smart Contract Service, which allows developers to run decentralized applications similar to Ethereum. However, thanks to Hashgraph technology, transactions can often be confirmed in just a few seconds, while fees remain extremely low, often just fractions of a cent. Another key advantage is energy efficiency. While networks like Bitcoin require massive amounts of electricity due to mining, Hedera's consensus system is designed to be far more environmentally friendly. According to various studies, Hedera has positioned itself as one of the most energy-efficient public ledger networks in the crypto industry. And in a world where regulators and corporations are increasingly concerned about sustainability, that could become a major advantage. But technology alone doesn't determine the success of a crypto project. The real question is whether the network is actually being used. So in the next part, we'll look at the latest news surrounding HBAR, the partnerships driving adoption, and whether real-world usage of the Hedera network is growing. Because that's where things start to get really interesting. So now the big question becomes, is anyone actually using Hedera in the real world? Because in the crypto industry, technology alone isn't enough. The projects that survive long-term are the ones that achieve real adoption. And this is where Hedera has been quietly building. Over the past few years, the Hedera ecosystem has expanded through a growing list of partnerships, enterprise integrations, and real-world use cases. One of the most talked about areas is enterprise blockchain adoption. Major companies have explored Hedera's network for applications such as supply chain tracking, digital identity, tokenization of assets, and secure data verification. For example, Hedera has been used in systems designed to verify the authenticity of products, helping companies fight counterfeit goods and improve transparency across global supply chains. Another area where Hedera has been gaining traction is payments and micropayments. Because transaction fees on the network are extremely low, often just fractions of a cent, it becomes possible to build systems that process millions of tiny transactions efficiently. This opens the door for things like machine-to-machine payments, streaming payments, and new digital business models that simply wouldn't be practical on higher fee networks. The ecosystem has also started growing in the DeFi and NFT sectors. Although Hedera isn't as dominant in these areas as Ethereum or Solana, developers have begun launching decentralized applications, NFT marketplaces, and financial tools on the network. At the same time, the Hedera Foundation has been actively funding ecosystem growth. Hundreds of millions of dollars have been allocated to support developers building on the network, encouraging innovation and attracting new projects. This kind of funding can play a major role in expanding a blockchain ecosystem because developers tend to follow capital and opportunity. Another factor that many analysts point to is Hedera's positioning in the tokenization of real-world assets. Many financial institutions believe that assets like real estate, bonds, commodities, and even carbon credits could eventually be represented as digital tokens on distributed ledgers. If that trend continues, platforms capable of fast, secure, and low-cost transactions could play a major role in the future of finance. And that's exactly the market Hedera appears to be targeting. However, despite these developments, HBAR has often remained under the radar compared to many other major cryptocurrencies. Which raises an important question. Could HBAR still be significantly undervalued compared to its long-term potential? Or are there still risks investors should be aware of? In the final part of this video, we'll take a closer look at the future outlook for Hedera, possible price drivers, and what could determine whether HBAR becomes a major player in the crypto industry. Let's break it down. So what does the future actually look like for HBAR and the Hedera network? There are several factors that could determine whether this project becomes a major player in the crypto industry, or simply remains a niche enterprise platform. First, let's talk about institutional adoption. One of Hedera's biggest strengths is its connection to large global organizations through the governing council. If more enterprises begin building real products on the network, this could significantly increase transaction activity and long-term demand for HBAR. Enterprise adoption has always been one of the most powerful drivers in the blockchain space. If large corporations start integrating distributed ledger technology into everyday operations, networks designed specifically for enterprise use could see massive growth. Second is tokenization of real-world assets. Many analysts believe the next major phase of blockchain adoption will involve tokenizing traditional financial assets, things like stocks, bonds, real estate, and commodities. Some estimates suggest that trillions of dollars in assets could eventually move on to blockchain-based infrastructure. If platforms like Hedera become part of that infrastructure, it could dramatically increase the relevance and utility of the network. But of course, there are also risks. The crypto market is extremely competitive, and Hedera is not the only platform trying to solve these problems. Projects like Ethereum, Solana, Avalanche, and others are all competing for developers, users, and institutional adoption. Another criticism sometimes raised by the crypto community is Hedera's governance model. While the involvement of large corporations brings credibility and stability, some critics argue that it may make the network less decentralized compared to fully permissionless blockchains. For some investors, decentralization is a core principle of cryptocurrency, and any system that appears too centralized can face skepticism from parts of the community. Despite these debates, Hedera continues to expand its ecosystem, improve its technology, and attract new partnerships. And in the fast-moving world of crypto, projects that focus on real-world utility often end up playing a larger role than many people expect. So the big question moving forward is simple. Will Hedera become one of the key infrastructures powering the future digital economy? Or will it struggle to compete in an increasingly crowded blockchain landscape? Only time will tell. But one thing is certain, HBAR is definitely a project worth keeping an eye on. If you found this breakdown helpful and want more crypto analysis, market insights, and deep dives into emerging blockchain projects, make sure to subscribe to Crypto Intel. Also, let us know in the comments, do you think HBAR has a strong future, or is it overrated? Thanks for watching, and we'll see you in the next video here on Crypto Intel.